All right, guys. So we have just seen one of the biggest market crashes in the past few years. And this really reminds me of what we've seen before during the start of the COVID-19 pandemic. In this live stream, I am going to share what is happening in the market. Like, why are we seeing this big market crash? I'm also going to share my short-term and long-term perspective on the market. And I'm also going to basically discuss how you can position yourself in this market for maximum profits. So let's dive into it. I actually want to show you a few things here on on my screen. So I'm going to do a screen share. The crypto market, it's not looking great. At least if you look at the 1 week, the 1 week performance of most of the crypto projects, they're all quite in the red. -20, -30, -40. Today, they're all bouncing back slightly. That's always when you have a big dump, there's always a little, bounce back, but we don't know where the market is going to go from here. If we look at Bitcoin, Bitcoin has also made a huge correction. We were at almost 67K not too long ago, and now we are at around 50, 55K. We were at almost 50K, 49K even yesterday. Right now, if we look at the fear and greed indicator, the market is right now extremely fearful. And I'm talking in particular about the crypto market. So if you don't know the fear and greed indicator, it's basically an analysis, an automated analysis, which shows how greedy or how fearful people are in the market right now. It's a score between 1 and 100, where 1 is extremely fearful and 100 is super greedy. And scores like these are very rare. Like 17, that is really, really low. People are extremely fearful right now. And in this live stream, I'm also going to explain why the crypto market is so fearful, because there's a lot going on. There's a lot of uncertainty, and we're going to unpack what is happening so that you can put all of the puzzle pieces together for yourself as well and understand why the markets are moving in this way. If we look at the S&P 500, so the S&P 500 is a basket of the 500 largest publicly traded companies on the US stock market. The S&P 500 has also gone through quite a correction. Right now, the S&P 500 is down almost 5%, 6% in the past week, which for the S&P 500, that's quite a move in a very short period of time. Of course, if you look at all of this over the long-term perspective, like a little fluctuation of a few percent up or down, it's almost nothing on the long term, but still on the short term, people are panicking. Because we've gone through a period where for a very long period, the stock market has only been going up, and now it has gone down, and it has gone down hard. And not only in the US, but also, for example, in Japan. And Japan is actually where a lot of this current global recession or all of the chaos kind of unfolded. And we're going to dive into why that happened as well. So here you see the Nikkei index, which is an index of the Japanese stock market. You see that it's also quite in the red. So they have made also a -10% correction to the bottom, even a -17% correction in a really short period. The stock market also has a fear and greed index. If we zoom in and we look at the fear and greed index of the stock market, so similar to the crypto market, this fear and greed index shows you how fearful or how greedy people are in the stock market. And right now we're seeing that we are at extreme fear levels in the stock market. And by now, I really hope that you know the saying of Warren Buffett: be fearful when others are greedy, and be greedy when others are fearful. Because when the whole market is panic selling, you get the opportunity to buy really great assets at bargain prices. But before we dive into that, let's first discuss how all of this unfolded. So all of the countries, or let's say regions, have central banks. Japan also has a central bank, which is basically determining its interest rates. And for a very long period, Japan has had a zero or even negative interest rate. For most people, the only experience you've probably had with negative interest rates, that's during the COVID period, where actually you had to pay the bank to hold your money. That's a very rare occasion in the rest of the world. But in Japan, negative or zero interest rates was the norm for a very long period. And in Europe and the US, after COVID kind of stabilized, the central banks started to increase the interest rates, and the period of zero or negative interest rates were basically over. But in Japan, they never increased the interest rate. They kept it at zero or negative even. So what happens during a period with negative interest rates? Well, people are reluctant to put their money in the banks because they need to pay the bank a fee to hold their money, or on top of that, even with inflation, your money is just losing purchasing power. So instead, people just prefer to put their money elsewhere in investments, for example, because with an investment, at least you can multiply your money, or you can increase the purchasing power through your investments. So that is one of the things that has recently been happening in the market. Well, I'm moving forward too quickly. Well, actually, what's happening in Japan is they recently announced that they are going to increase their interest rate. So they have been negative 0.1% for a very long time. And recently they increased it to 0.1% and 0.25% now. That's currently where the interest rate in Japan is. And the whole economy, the whole global economy is freaking out. Why? Because for the longest time, they were able to borrow money in Japan at almost no interest and basically free money. And they could use that money in order to invest it elsewhere to get a really great return. But now that Japan is increasing its interest rate, we see that people are panicking and selling their investments overseas to pay back their loans in Japan. So all kinds of assets worldwide are currently being liquidated, which caused a cascading effect in the stock market. But when something happens in the stock market and the investor sentiment turns sour, then usually it also ripples to other markets, like, for example, the bond market or the crypto market, and it starts to influence each other because the whole global economy is interconnected. There's almost not one single component that can move in isolation. So when something like this happens, it triggers the rest of the market to move too. But this was not the only event which was playing out. We also saw that jump trading, which is a very big market maker, started to sell massive amounts of Ethereum. So they started to do this last week. And when people saw the price of Ethereum dump, they started to panic as well. So you see, when one company or one entity or one event happens, and it happens in occurrence with another big event that's happening in the market, then people start to mass panic. But these were not the only two things that were happening in the market. There was something else happening as well. Hamas political chief Ismail Haniyeh, I'm not sure if I'm pronouncing that correctly, but in any case, he got assassinated in Iran. And you know, right now, the tensions between Iran and Israel are quite tense. So this has created rumors that Iran is probably going to retaliate Israel and is going to plan a multi-front strike on Israel. And if you look on Twitter right now, the rumors are only intensifying. You see that President Trump is speculating that Israel is going to be attacked by Iran tonight. You see videos that Hezbollah, which is a religious group fighting Israel from Lebanon, is already sending attack drones to Israel. So there's already a lot of fear that is happening in the market. And the markets don't like uncertainty. They like stability and predictability. And right now we are in a big period of uncertainty. Hence, people are panicking. They don't know where they should park their money and how they can protect themselves against all of these events. So that's why we're seeing such a big sell-off. So it has been a combination between the Japanese central bank increasing the interest rates, causing many different investments around the world to be liquidated in order to pay back those loans. We have jump trading, which is a large market maker, which started to sell large amounts of Ethereum, which freaked out the crypto market. And on top of that, we have a potential World War III looming around the corner. So lots of uncertainty that the market doesn't like. I always believe that success leaves clues. And one of the best ways to spot trends in the market is to follow what the smart money is doing. And in the world of investing, people that know me always hear me talk about this, but in the world of investing, there is one investor which I really look up to and which I very carefully follow, which is Warren Buffett. Warren Buffett is one of the wealthiest people in the world with a net worth of over $100 billion. And if you're looking at what Warren Buffett is currently doing, I'm also going to pull up these charts over here. If you're looking at what Warren Buffett is currently doing, you see that last week he cashed out almost 50% of his Apple holdings. Apple was his biggest holding in his investment portfolio of Berkshire Hathaway, the fund that he's basically managing. And right now, Warren Buffett is holding $277 billion worth of cash. That's a record amount of cash that he's holding. So now you might ask yourself, why is he holding that much cash? Was he predicting that we were going to enter a recession? And is that why he's holding on to so much cash right now? Because he understands that during times of recessions, you can buy really great assets at bargain prices. So what do you guys think? Was Warren Buffett onto something? Here is a tweet by Robert Kiyosaki, author of the book Rich Dad, Poor Dad. Again, this is the absolute Bible. For those of you that haven't read the book Rich Dad, Poor Dad, I highly recommend you to read it, at least if you want to become financially free, because in the book, Robert Kiyosaki explains how you can become financially free by investing in assets and avoiding liabilities. And Robert Kiyosaki says, as many have warned, the stock market crash has arrived. Losses are substantial, and Rich Dad taught his son and me, when the markets are crashing, that is the time the rich get richer. Exactly. The rich get richer during times of recessions. Why? Because they can buy assets at bargain basement prices. So we should be celebrating whenever the market is red, whenever there's blood on the streets. That's the best time to buy. So I just want to keep reminding that so that you have the right mindset to navigate through this period. There's a very important world event on the horizon, which is the US presidential elections, which are coming up in the beginning of November. And why is this so important? Because during election years, usually they don't want that much chaos to be in the world, in the market. So what is very highly likely to happen in the next few weeks or months, similar to what happened during the COVID period. And here you see a video again on Twitter that the money printer is gonna go on again very soon. Why? Because they need to prop up the market. They need to get back the positive sentiment into the market. And that's also what we saw during COVID times. When people completely panicked, they reduced the interest rates and turned on the money printer. And what is the effect of the money printer going back on? Well, I often share this website, what the fuck happened in 1971, but let's do a little very short recap of history. For a very long period, the dollar was connected to gold. So there was a ratio between how much gold every dollar was worth. And this ratio was basically conserved all the way to 1971. That's the year when the US government basically ended the gold standard. Why? Because of greed. Because the moment they disconnect fiat money, the dollar, from gold, they found a way in order to print more money. There was an excuse to print more money because they didn't have to stick to the same proportion anymore. So from 1971, the US government, and not only the US government, but many governments around the world, have printed trillions in order to fund their economy, in order to fund their wars. And what is the result of all of this? Let me share my screen again. Well, the result of all of this, if you look at this chart, is that the rich got richer and the poor got poorer. So this chart shows the income concentration at the top has risen sharply since the 1970s. What happened in the 1970s? In 1971, the gold standard got abandoned. The US government and other governments around the world started to print more money, but the rich got richer. Interesting. Here again, another chart which shows this, that the top 1% is becoming richer, while the bottom 90% are basically becoming poorer. So why is it that the rich get richer and the poor get poorer? It's because the poor panic during times of recessions, while the rich understand that it's time to go on a shopping spree. Because when the money printer goes on, assets, more money flows into the markets, which drives up the prices of assets. On the other hand, if you have a salary and more money is created, then you're going to face inflation. So if you have the same salary, let's say $3,000 or $4,000, 4,000 euros, with that same amount of money, in 1 year from now, you're going to be able to buy less and less because every unit of money is becoming worth less. So right now you're at an intersection where you can decide, okay, I'm just going to be a bystander and watch all of this happen and just wait for the market crash and all of the negativity to pass by me, or you're going to take advantage of this window of opportunity to buy more assets. So what do I believe will happen on the short term and what do I believe will happen on the long term? Well, on the short term, to be honest, we don't know. After market crashes like this, it is possible that we can rebound really quickly. We call this a V-shaped recovery. And within a very short period of time, we could be back at the previous all-time high levels. However, with all of the uncertainty in the world right now, with potentially a World War III looming around the corner and even more stuff that might be brewing under the surface, we really don't know what is going to happen next. So the market might go up on the short term, but it might also go lower on the short term. It might last another week. It might last a few more months. So the short term is always quite uncertain. We never really know what the market is going to do in the short term. However, on the long term, we have some more data that we can look at. So this is not the first time that we're seeing a crash like this. For example, what I mentioned in the introduction of this live stream as well, at the start of the COVID pandemic, we also saw a huge market sell-off around March 2020 in both the stock market and the crypto market. So here, if we look at the crypto market and we go to March 2020, again, we see quite a big sell-off here. So this was a sell-off in March 2020. Bitcoin went from 9K all the way down to 5K, quite a big jump. And the sentiment at that point in the market was Bitcoin is dead. It's never going to be able to go back to the previous levels, and it's probably going to go to zero. People were really bearish. People were really negative about crypto, about stocks, about the whole world. And that's a typical sentiment that you're going to experience during these market crashes. But that's why it's important to surround yourself with a community. Because when you're surrounding yourself with like-minded people that understand what is going on in the market, you can better focus and how do you say it? You can better filter out all of the noise and focus on the real facts and the real strategies to build wealth in this market. And that's not by listening to 90% of the people who are unexperienced investors with no track record to show for. Find a community of investors that understand what is going on and communicate with them on a daily basis, because this is what's going to get you through these periods, through these market crashes. Okay, to answer the question one more time, what do I believe will happen in the short term? Honestly, we don't know. If we look back at historical data, the 2020 crash was very quick. However, we also saw a sell-off in 2021, 2022, where it took a bit longer for the market to recover again. Also here in 2008, that's another big example of a market correction. It also took a lot longer for the market to get back to previous all-time high levels. It took almost a few years to get back to the previous all-time high levels. But one thing, in my opinion, which is clear from these charts, is that over the long term, the market tends to go up. So if you take advantage of these fire sale opportunities in the market to get great assets at bargain prices, then if you're patient and if you're holding them for the long term, then you should probably see really nice returns. Again, that is how the rich get richer during times of recessions and the poor get poorer, because they don't understand what we are discussing in this stream today. So what am I doing during this market crash? I have been stacking quite some cash, and I am going to be dollar cost averaging into a bunch of different assets. You see, my philosophy is I'm talking a lot about crypto, of course, but I'm not only investing in crypto. I also hold stocks, real estate, watches, other types of assets spread over different countries. So I am just building up my diversified investment portfolio. I've got a watch list of different assets that I'm always tracking, which I'm going to be dollar cost averaging in over the next few weeks. So again, I'm not pouring all of my money into the market right now. The market could go lower, it could go higher. We don't know. But historically, dollar cost averaging into the market, into projects or companies that you really believe in, that is historically proven to be the best strategy during such periods. So I hope that you guys found this breakdown useful. Let me know in the chat if there are any important questions, things that you guys want me to cover before we wrap up this call. Let me know in the chat. All right, it seems like there are no questions. That's good. When there's no questions, I assume that all is clear and that you guys know what to do next and how to navigate through these times. Patrick is saying, clear story. Okay, amazing, guys. So now it's up to you guys to take action. And hopefully in a few weeks or a few months, we're going to look back at this historical moment and we're going to laugh at the nice returns that we have all made in this market. Damien is saying, thank you, great call. Tim is saying, thanks for the update and clarification. Helena saying, thanks for taking the time to explain. All right, people, it was my pleasure. Enjoy the rest of your day. Take care, and I'll see you in the next one.